Hi, this is Scott Voak, and welcome to another segment of Real Estate Matters. Today, I'm going to talk with Lance Groth about 1031 tax deferred exchanges. Lance, thanks for joining me today.
Gracias. Thanks to be here.
Your Spanish is not great.
Not at all.
No. Okay. All right. A lot of the people I deal with, they're primary home, they own their primary residence, and then they rent it out when they buy a next one. And we all know about the tax-free gains on a primary residence, but sometimes they slip a little far and they go into a point where now it's an investment property. What does a 1031 do? Why does it exist for an individual investor?
Simple. A 1031 shelters capital gains tax. So if they're actually selling an investment property, which is, like you said, different from the primary residence, it puts them under a whole different category in terms of deferrals. So the primary residence, if you live there, it's homeowner's exemption. Right. But if you're utilizing any real estate asset for business or investment, you're in the 1031 exchange area. That means it qualifies for a 1031 exchange.
Okay, so let's back up a little bit. What's the difference between you're talking tax deferment? Does that mean I never have to pay taxes? It's gone?
No, man, you're just kicking the can down the road.
Okay.
Kicking the can down.
So how does that work? So basically, I got a condo that I used to live in. I rented it out for 5 or 6 years, and now I want to buy something else. By deferring it, how long am I deferring it for? When do I eventually have to pay those taxes?
You can defer in perpetuity. The only time you actually really have to pay those taxes is if you sell your next property and you don't do a 1031. But a fun fact, if you sell it, you do another 1031. Again, another 1031. And should you pass away and you pass that property to your heirs, all those taxes will be completely absolved.
Right. So for the person who's just hearing about this the first time, 45 days I have to identify property. How many properties can I identify? Because what if the one I want to get falls through?
Yeah, so what happens is, so they sell the investment property. Escrow closes. Look at escrow closing like this big gunshot that goes off. Like, pow, you're off to the races.
Starts, okay.
2 timelines kick in. 45 days to identify, 180 days to actually acquire.
Okay.
Now, the 45-day is this. You have 2 ways of identifying. Now, the most commonly used one is called the 3-property rule. You have 3 options, plan A, plan B, plan C. But you have no limits on how expensive. Because remember I said, it's like you're changing the nature of your investment. So if you sell for $1 million, you have to buy for $1 million.
Or more.
Or more.
Okay.
But with the 3-property rule, it's like, all right, you sell for $1 million, you can identify 10 million. This one, 42 million. This one, whatever. Just as long as it's equal or greater. But you have 3 options. If 3 options are not good enough for you, then you can use the 200% rule. And under that rule, you can identify an unlimited number of properties, provided that the aggregated sum doesn't exceed 200% of your initial sales price. So the 3-property rule, limited on your options, not limited in your valuation. Most commonly used rule. 200% rule, not limited in your options, but you are capped on your valuation.
So there's 2 issues here. The first is what a lot of people don't realize is they have to call you before they close escrow.
Yeah, that's the worst call I have to do when they don't.
How long does it take? When do you want to get that phone call that, hey, I've got a property, I'm in escrow?
Yeah.
In a lot of cases, it's the agent calling. When should that call be made to you?
To all you agents out there, pay attention to this part, okay?
Yeah, definitely.
It's this. I say this, simple thing. You open escrow, you open your exchange account. It's that simple. One, we do all of our work with escrow. Like you open escrow, we call escrow, we say, give me the purchase contract, prelim, and escrow instructions. We use that to create our exchange agreement. But this is the thing, the entire purpose of us, a qualified intermediary, somebody who is not a party to the transaction. Because if escrow closes and escrow does what they normally do, pay the agent, pay the title, pay everybody else, the buyer hands over the money, and they cut a check to the client will be in constructive receipt of the funds. And that is literally why we're here. The client can never be in constructive receipt of the funds. So to every agent, we implore them, call us when you open escrow, you open your exchange account. And with us, we do this. We do not charge any fees unless escrow closes.
All right. Well, hey, thanks very much for sharing some time with me. Stooping down to real estate level and making it really easy to understand.
Real estate level types.
All right. Thank you very much. We'll do this again soon.
Absolutely.